Welcome to Talking Property. Today my guest is Louis Christopher, Australia's best property analyst. Louis, thanks for joining us.
G'day Peter, how are you?
Yeah, really well, thanks. How was the 2018 property market in Sydney, specifically in the inner west as well?
Well, in Sydney it was a major downturn.
Yes.
Basically, dwelling prices have come off by about 8% from the start of the year. The inner west has been one of those areas which has been more harder hit. So for the September quarter, a number of data providers recorded a big fall. So APM, for example, APM Domain had the inner west down by 5% just in the quarter. And we had asking prices down by about 5.5% for that same quarter.
So annualised, you're talking over 20% per annum there.
Yeah, true. But look, I don't think we're going to see 5% drops every quarter going forward for the inner west. But quite clearly, it's a major buyer's market at the moment, and sellers are adjusting, whereas before they weren't. They were sort of holding hard, but now they've realised they've got to meet the market if they want to sell. Yeah. There's a lot less buyers in the market across Sydney, and particularly in the inner west.
Yeah.
Now, I think this has transpired, particularly in the west, as a result of a number of factors. But the truth was that in 2017, in the lead up to 2017 as well, the inner west market became particularly frothy. You were seeing just buyers being really fearful of missing out on the property and really competing very hard with each other at auctions. And for a brief while there, prices were way above fair value in the inner west. And so when we had the final trigger of the interest-only lending being scaled back in the second half of 2017, that was basically it. That affected a lot of would-be investors.
The results of 2018 were a little bit different to your forecast for 2018. Is there any other factors that caused such a dramatic gap in expectations versus outcomes?
Oh, that's right, Peter. I mean, I'll be the first to acknowledge we got it wrong for 2018. Yep. And why did we get it wrong? Because we thought potentially there would be one more year of price rises. We were well aware, and we stated in our report, that the market was overvalued.
Yes.
And we also stated that a restriction in lending could bring on the downturn, but we also believed that APRA and the Reserve Bank of Australia would intervene in the market in 2018, and they didn't. So they were actually far keener than what we thought they were in terms of creating a deleveraging event. This is what this downturn's about. It's supposedly, and I've seen the words that they've used, they said that this is a managed event. You know, it's very deliberate policy to create a deleveraging scenario in the housing market.
First home buyer markets, are they showing resistance with the incentives for first home buyers?
Some. I see some of my peers believe that, for example, in the outer ring of Sydney, prices haven't fallen. We strongly disagree with that. They have fallen. First home buyers have been in the market. But let's just keep in mind that investors, this has been an investor-led downturn, okay? And investors generally have been operating in the lower to middle end of the market. They generally don't operate at the top end of the market, because the transaction costs and the holding costs are a lot higher for investors. So it actually works out to operate in the lower to middle end of the marketplace.
And yields tend to be a lot lower on top end properties,
Absolutely.
don't they?
It really doesn't work out well for investors to buy at the top end.
You're buying for capital growth at that end if you're an investor, right?
Yeah, that's right. And you're also taking some rather big bets when you're doing so. But whereas at the bottom end and the middle end of the market, the bets are smaller, the transaction costs and the holding costs are a lot lower proportionately. So, with investors leaving the market, we argue that it's been the middle and lower end of the markets which have been affected by that. The very lower end of the market's been offset kind of by more first home buyers in the market.
Is there a buyer resistance point coming in here, or is the market simply in free fall?
There are still buyers in the market, so it's not like to say there are no buyers. In fact, I've never known a Sydney market where there are no buyers at all. And I've known the Sydney housing market all the way back to the late 80s.
Would you say there's more sellers than buyers in the market?
There's definitely more sellers than buyers in the market. And at this point in time, from what we can see, vendors are more quickly adjusting their prices downwards to try and meet the market.
So there's acceptance from vendors about what's happening out there.
There's greater acceptance. I wouldn't call it panic, but vendors are keen to sell. More and more vendors are keen to sell at current prices, because I do believe overall vendors think that prices will keep falling from here, and I would believe that that would be the case. Our view is prices will keep falling from here in 2019.
Some research tells us that stock levels are at 10-year highs.
Yep.
Is that your view? And if so, what role do stock levels play in a property market?
They are coming up to 10-year highs. So the all-time high we've got on Sydney is actually back in late 2008, where there were over 40,000 properties on the market. We're about to report on the November numbers. I've had a bit of a glimpse in terms of what they are to date, and there's been a rather big increase so far in November. So we'll be very close to that number, if not exceeding that number. So a lot of stock in the market. And to give your viewers some comparison, back at the top of the market, there were only about 20,000 properties. So we're seeing a doubling of stock in the marketplace right now in Sydney.
And is that a case of listings coming onto the market or listings not selling, and therefore the available stock level, the base is swelling, so to speak?
It's more the case of listings not selling.
Right, okay.
So when we look at our days on market, which takes into account properties that are still on the market, withdrawn, plus the solds, like in Sydney, we're over 130 days in the market, whereas in the peak of the market, that had fallen down to about 45 days.
Yes.
So it's taking a lot longer to sell, and that's because in this market, if you're a vendor trying to sell and you place your property above the market, it's not going to sell.
Yeah, I'll attest to that as an estate agent, that's for sure. Louis, I always said that there's a difference in the property market between speculators and investors. Regardless of which category one falls into, what sort of signals should we be looking out for to suggest that this market has bottomed?
The first thing we should see is basically a levelling out in auction clearance rates. So right now in Sydney, auction clearance rates are in the high 30s. That's extraordinarily low and normally translates to price declines in the order of about 7 to 10% declines in a year. So there's only really been about 3 other occasions in the last 30 years where we've had auction clearance rates this low. But one of the first things we should see will be a bottoming out in auction clearance rates. I don't think we're quite there yet, but keep in mind when we cross over into the new property season at the end of January next year, we're likely to see a seasonal increase in auction clearance rates.
Louis, Sydney has experienced thousands, tens of thousands of apartments coming online over the last 3 or 4 years. I'm interested to see what your numbers are telling you, the impact on the rental market with all these new dwellings into the marketplace.
Well, over the course of 2018, rental vacancy rates in Sydney have been rising. So we've got a number now of 2.8%, which suggests that that's a market that's increasingly favouring tenants. In some areas of rental vacancy rates a lot higher.
So higher vacancy leads to lower rents.
Absolutely, and rents have fallen in Sydney in 2018.
Have you got some colour on what percentage that might have fallen by?
Yeah, they've fallen by about 2 to 3%. Some areas more.
Okay.
The areas affected the most, it's definitely Sydney's northwest.
Yes.
So as you would be aware, we've had a lot of new land release in Sydney's northwest over the last 5 years. And perhaps in the last couple of years, the amount of completions in that area has just been a little bit too much for demand to absorb. For overall Sydney, the number of completions appears to have now peaked. Okay, so completions will decline from here. So in time, these rental vacancy rates will fall again. I think though they're going to rise before they fall in Sydney. I expect them to start falling, I think, in early 2020.
So it's not often that we see a falling property market in terms of values and falling rents at the same time,
That's right.
And that's probably the impact of all of these new dwellings coming online, whether it be housing estates or apartment buildings closer to the city, yeah?
Yeah, that is correct.
So, Louis, finally, removing personal interests in the property market, is this shakeout ultimately going to be good for the property market and the economy at large?
Look, I think it's good that we're having a correction because the Sydney and Melbourne housing markets were very overvalued, Peter. And I wouldn't have liked to have seen that overvaluation continue to expand. It could have been a particularly nasty hard landing if that were to occur. All the same, they were heavily overvalued. And so a shakeout was due. We're having it now. Is it bad for the economy? Well, so far, not yet. There hasn't been a major impact upon the economy. And one good thing is that the level of arrears and defaults are still at very benign levels. We're talking about like 1% of loans are going bad, which it's lower than the long-term average. So we're not
That's
having...
an outstanding stat, isn't it?
Yeah, it's a good thing.
Yes.
If we were to see arrears start to rise over 5% and defaults going that way, that would be really bad news.
You'd have to think that Christmas retail spending is going to be a very interesting figure this year.
Yeah, I still think that with this downturn, it's affecting spending and it's affecting overall confidence.
Much to watch going forward.
Yes.
Yeah, Louis, thanks for joining us today. That's terrific information.
Good to be here, Peter.
And thank you for joining us today on Talking Property. In our next edition of Talking Property, Louis is going to preview the 2019 property market.